Hey, what's up YouTube? On this video, I'm going to share with you an update to my Webull portfolio. This is the dividend portfolio that I'm building to pay me $1,000 a month. So I wanted to give you an update to how things are going. It's been a couple months since I've shared with you an update. I want to kind of talk about how much money I earned in dividends in the month of August. And then I want to share with you a little bit about what else I'm learning how to do on Webull, which is options trading. And then at the end, I'm going to give you an update to my liquid asset distribution, which shares with you an overview of how I invest all of my assets. My name is Paris Clough, and this is Financial Self-Reliance. On this channel, we talk about the mindsets and the skill sets of the wealthy so that you can learn how to manage, protect, and grow your money. If that sounds like the kind of channel you want to be a part of, smash the like button, hit subscribe so that you don't miss any of the content that I produce. All right, so let me share with you this spreadsheet that I have, and this is the spreadsheet that I use to track all of my dividends in my dividend portfolio in Webull. This money here is to build a dividend portfolio that's paying me $1,000 a month. Right now I have about, as you can see, I have about $20,000 invested in that account. It's the market value is 21. When we go over to my dashboard, you'll see that it's a little bit higher than that, my actual value, because I have about $5,000 that I've put into the Webull account to do options trading. I'm learning how to do options trading. I'm learning how to do cash secured puts and cash covered calls. So the wheel, so to speak, and options. If you're familiar with options, if you've ever done options before, you'll know or recognize the wheel strategy. I'm actually going to share with you mostly my portfolio here on my dividends. So as you can see across the top here, I have about a 6% yield in my dividend portfolio. So right now the market is going down. A lot of red we've been seeing over the last couple of days as news is coming out about China and basically the Lehman Brothers of China is happening, and so they're going under, and the economies are all kind of capitulating right now, kind of trying to figure out what's going on and settling. In a dividend portfolio, although you want to watch what the values are of your stocks, and the values are always important to keep track of, in a dividend portfolio, you don't really care so much about the value of the stock as you do that the dividend continues to pay. So what that means is that I'm still earning those dividends. Even if the value of the stock is going down, I'm still earning those dividends. And that's the beauty of dividend investing, is that you can continue to invest over the long term, and even if the value of those accounts goes down, as long as you've got a strong dividend portfolio, that money, that income is going to continue to come in. Now, of course, if a company goes too far down, they're going to start cutting back on their dividends, and so that's kind of where you kind of want to keep track and make sure that you're into good, solid, strong companies that will continue to pay dividends over the long term. You want to make sure you're invested in strong, solid companies, because those are the companies that are going to continue to pay dividends even through strong or hard economic times. In this particular account, you can see I'm fairly well diversified. I want to show you this chart that I keep. So this chart that I keep right here is a chart that I want to show you that gives you an idea of how I'm diversified. There are 11 sectors in the market, and you want to have some diversity in each of the sectors. That way, if one sector is doing really well or one sector is doing really bad, you can kind of compensate for that, and it's just a well-rounded portfolio to have stocks in different sectors. So as you can see, I have materials. Let me just zoom in here a little bit to get a better idea of what you're seeing here. So as you can see, I have the different sectors: materials, utilities, industrials, real estate, consumer staples, information technology, healthcare, financials, communications, and energy. So I try to keep a pretty close percentage on each of those, and as I continue to put money in, I'm going to put money into the ones with the lowest percentages first to build those up. So for example, the next time I invest some money, it's going to probably be in materials because I only have 7.2%, and I probably won't put any money into financials or consumer staples because I've already well overbalanced there. So as you can see, that kind of helps me keep the balance. What I've also done is kept track of my income, and as you can see, I started this process back in 2019, down here at the bottom is the blue. So September of 2019 is when I opened my account. October, November, you can see that my dividend income grew. December kind of dipped down a little bit. And then in 2020, you can see I started to have the red line here, started to grow a little bit better. I invested more money in 2020, 21, and that's why you're starting to see the yellow bar here is really starting to take off in 2021. That's the year I really started investing a lot more money, and because of that, my dividends are increasing. And not only are my dividends increasing because I bought more shares, I bought more companies, they're also increasing because every year as companies do well, one of the things they like to do is increase their dividends. And so some of this has to do with increased dividend from the company just from having owned the shares and kept the shares, and some of it has to do with me just buying more. But as you can see, my best month this year so far is June, where I had almost $80. You can see almost $80 in dividend income that month. This last month in August, I had just over $60. It was $62.80. And so that was really exciting. In fact, I want to show you this. And this is a chart I keep. I want to show you here. Last year in August, I earned $6.28. And this year, I earned $62.80. Literally 10 times the amount of money from one year to the next. I think that's awesome. To grow your income 10 times from one year to the next. From August 2020 to August 2021 is a 10x increase. So that's incredible. That's pretty awesome to me. So now I want to share with you the Webull desktop so you can kind of see what that looks like. So here's the Webull desktop. This is my account. This is over here on the side you see watch lists. You'll see stocks. I can do, that's where I go to look up stocks, markets. I can check any market that I want. So this is watch lists here. I have my positions, all stocks, my watch lists across the top. So the next one down is stocks, where you can kind of get the charts and see what's going on. And as you can see across the top, you can see there's chart, options, notes, news, financials, analysts, etc. so that you can do your research there. Coming down, you see markets, so you can get an idea, a whole overall idea of what's going on in the markets. You can see the S&P, the Dow, the NASDAQ. You can see indexes all across the world up here in this chart. And then coming down, this is where I do a little bit of homework on the screener. The screener is where you can come in and you can click on filters. Now I like to, as I shared with you earlier, I want to make sure that I'm investing in the sectors so that I am properly diversified and I'm balanced. And so I'll click on sectors as a filter. I want to take a look at my dividends, what companies are paying dividends, and what's the dividend yield. And then I want to look at the analyst rating. This is what I do to make sure that I'm getting a good deal with the stock. And so I'll come here and I'll make sure that this range of dividend yield is, I'll kind of make it more reasonable, 5% or so. And then this shows me all the companies that are in those parameters. So I might want to lower some things down to get more options here, widen the search parameters so that I can get more options. And you can see there's a lot of great companies in here, and this is what I do. If you want to have a different region, Canada, Chinese, or United States, you can see the exchanges are all here. I like to have them on all the exchanges. And then you can look up the sector. If you want to have just healthcare services, there's not going to be anything in those parameters. Collective investments, banking, you can see it just kind of filters it down. So if I have some investments that I want to continue to make, or if I want to buy some new companies, I'll come here, I'll do a little research, I'll figure out what's going on, and then I'll also come down here and I'll check all the ones that have strong buy or buy according to analysts' ratings, and then I'll kind of make sure that I'm filtering it down, doing my research, doing my due diligence before I buy into a investment. Now I also like to use Dividend.com and TipRanks and a couple other places, Yahoo Finance and Google Finance. I go to those places to also do some research before I buy a company, because I want to make sure that everything matches up with what I'm seeing on this app, as well as what's going on in the market in Google News, with Yahoo Finance, Google Finance, and some of the other ranking systems that are out there. So I try to do my homework, try to do my due diligence, so that when I buy something, I know it's going to be good and it's going to do the right thing. If you'd like to know about what I'm doing and how I'm doing options, and like to see me do an options trade, then comment below that you'd like to have more information about what I'm doing and how I'm learning about options and doing puts and calls and the wheel strategy, so that I can share with you what I'm learning. It's something that's pretty new to me, so I'm not totally confident to teach and talk to it yet. But as I'm learning more, as I'm having more experience, I'm getting more confidence, so that at some point in the near future, I'd really like to do a video about how to do options and how we can all make more money doing options. So if that's something that you'd like to see me do a video on, put that in the comments below, and I'd love to prepare myself for that, for a video like that in the near future. All right, now let me share with you a couple of things that I use to track my net worth and track my assets. So this is a chart that shows in May, this was in May of this year, 2021, I had 13% of my assets in liquid cash, which is readily available, basically my checking account, so I could pay my bills. I could take that money and buy stocks or buy some ETFs or whatever I needed to buy. I had 17% in precious metals, which is gold and silver. I highly recommend, and I'm very much big believer in owning and holding real, tangible money. Gold and silver is God's money. It's the money that God put on the earth for us to use. Every major civilization has used gold and silver. And when civilizations move away from gold and silver, that often is a sign that they're about to have some problems economically. And we moved away from gold and silver in the United States several years ago, a couple decades ago actually, and we're starting to see some real economic situations. So I have 37% of my assets in cash reserves. Now I keep probably 3 or 4 months worth of cash just for my emergency fund, but the rest of my reserves are all for my taxes. I'm self-employed, so I have to pay quarterly taxes. So I put money into my reserve account, and then every quarter I'll pull that money out and I'll pay my bills. And my accountant and I worked out a deal so that I could actually leave more money in my account and pay a percentage every quarter, and then at the end of the year I can pay more. And by doing that, what I get to do is I get to have my cash reserves earning interest all year long. And so I don't have to pay all of my money every quarter. I get to pay half of it, and then the other half can be earning interest throughout the rest of the year. And my cash reserve account right now is averaging just over 3%. And 3%, it's an FDIC insured account. It's really fantastic. In fact, I'll be honest with you, it's PrizePool. And there's some videos I'll link in the description above here so that you can see. But PrizePool is definitely worthwhile for those of you who want to be able to have money set aside in a place where you can earn a better rate of return than what you're getting at the bank. Have it be FDIC insured. Have it be guaranteed to be there for you. You're not going to lose your principal. So the other part over here, as you can see, I had 6.3% in crypto at that time in May of this last year, and 25% of my portfolio in stocks. All right, now moving forward to June. In June, I had 12% in liquid, 18% in precious metals, 39% in cash reserves, 4.5% in crypto. As you all know, and many of you know anyways, crypto has kind of been fluctuating quite a bit lately, 25% in stocks and ETFs. So today, I updated my portfolio, I updated my asset distribution, my asset allocations portfolio just this last week. Actually, it was on Tuesday of this week. Right now it's Thursday. I'm recording this on Thursday. You're watching it on Friday. But I'm recording it Thursday. You're going to see my cash reserves are at 41%. Crypto's at 4.4%. Stocks and ETFs are at 30%, 31 almost. My liquid cash is 9.7%, and my precious metals is 13.2%. One of the big things that's happened in the last 3 months with precious metals is that the price of silver has gone down quite a bit. It's gone down almost $6 an ounce. That's a pretty big dip, but the good news is that I can buy more. Between stocks dipping and precious metals dipping, now's the time to take some of my liquid cash and turn it into these investments because they're all on sale. One of the great things about having the market kind of go down is that you can buy up shares of stocks for a discount. And so I'm kind of excited that the market's going down right now because I want to buy some more shares of some of the stocks that I have dividends for my dividend portfolio, and having a discount on those shares is really cool. So I can buy up some more shares. Also, I'm going to be buying some more gold and silver this week or next week, and the fact that it's on a discounted price is awesome. So I don't like the price going down when I buy it at a higher price, but if you have some more liquid cash to buy more, you can buy it as it goes down and you dollar cost average into a better price. And so whenever the stock market goes down or whenever the price of valuables go down like precious metals, that's kind of the best time to start buying or buying more. And that's what I'm going to be doing. So the next time I share this liquid asset distribution chart, hopefully we'll see some different percentages and my precious metals will be up and my stocks will be up. So I hope you got a lot out of this video. I hope that you could see some of the things that I'm doing to invest for my future, and they might be some good tips and tricks for you to be able to invest and make some changes, make some tweaks in what you're doing, and so that we can all have a better outcome in our financial lives. I look forward to seeing you on the next video. Hope you have a great day.